I just want to carry on with the Yahapalanaya period, if you wouldn't mind. There has been specific criticism of economic policy during that period, and I want to go to the 2016 IMF agreement. And I think the impact on growth, because there were 2 years within the Yahapalanaya period which were the lowest growth in Sri Lanka for a couple of decades. So, but the obvious answer is that you have to substitute growth for fiscal consolidation. Do you feel that Yahapalanaya went too far or too fast with the fiscal consolidation, that it, because what the point I'm getting to is the local government elections of 2018, which were before these attacks. But the SLPP, a new party, completely cleaned house during that local government election. And I assume that had something to do with the real economy. So do you see some kind of room for critique there with regards to that?
Yeah, I would say that always there is room for critique, particularly when you take tough decisions. Sometimes the decisions may not be very popular, and there's room for critique. But the question is, we did the right decision. Sri Lanka, right, could have even collapsed if we didn't take those decisions much earlier. So we focused on fiscal policy, monetary policy. Fiscal policy is reduce the budget deficit. Revenues had to go up. It was about 9-10% of GDP. It went to nearly 13% of GDP in a very short period of time. And we also increased the tax net as well.
Yes.
It's not only the percentages, but the net was increased. Right. Inflation was probably at its lowest in a long, long time. Inflation, interest rates were also very, very low. Right. And if you look at that period, right, poverty levels came down drastically during that period.
Right.
Southern province went from 7.7 to 3%, Sabaragamu 8.8 to 6.7, Uva from 15.4 to 6.5, Central province 7 to 5, North Centre 7.3 to 3.3, Northwestern 6 to 2.7. So if you look at it, if you look at the real results, right, but things are not popular. Then I remember talking to Mangala and saying, Mangala, now, we have to also look at the cost side. And we discussed it, but we said this program doesn't really encompass it, but we have to basically look at it in the future. Then looking at the trade balance, right? We need, obviously, exports have to be encouraged, exports have to go up, and we need to look at how can we actually get our exports up. Now, there are some things that our period was short. As you said, we came in there, we were just there for about 2 years. We couldn't really implement it. We want to liberalize this thing more. We want to take more radical decisions. We came up with the full price formula, when we thought about the trade balance, that issue. I can remember going to Parliament talking about it, everybody laughing and saying, what are you talking about? 5 years later, basically they have brought the full price formula in one way or the other. They have basically implemented it. Then we were looking at exports, what needs to be done with actually simplifying processes, etc. Particularly land. If there's an entrepreneur, they want to basically get a land or get a factory going, or an office building going, or whatever. It takes so long. Decision making takes so long, right? So some of those things we couldn't deal with. Those are the things that we basically had to deal with if we went forward. If you look at it in terms of, as you said, growth was not great, right? I mean, Sri Lanka needs to grow at the 6-7 range for maybe a decade. We were more at the 2-3-4 range, during that period. So growth certainly, didn't get speeded up. Also, we need to remember that we were dealing with a situation in which the period before us, government had focused on infrastructure development.
Construction boom-led GDP
Construction boom-led GDP growth, right? And then it was not trade-based in any way.
Yes.
And they did it by borrowing money, right? And borrowing money. And this was what we were actually dealing with. We had airports with no planes. We had ports built, it's still no ships are coming, right? We had built highways. The highway was built, and then we, in our period, had to extend it because it was half-done work. And when I drove down there, people were actually drying clothes on the highway, right, between Matara and Hambantota. Even today, these are investments that really have brought no return to the country. We are bankrupt because of these investments. We have had politicians who haven't looked at the total interest of the country. They have looked often at their hometowns, their home villages, and their home provinces. Whether it's Hambantota, or whether it's Polonnaru, or wherever it might be, they haven't looked at the total country and said, this is the best decision for this country. We need a leader who looks at the whole country, and we take one side proper macroeconomic decisions, on the other side proper decisions on investment. Then in that period, if you want investors to come, it's a question of confidence. And in this question of confidence, that has been broken. And one big thing that happened in the previous parliament was they brought a bill. Government had given lands, factories, various things to private sector businessmen. And they were doing it and going. They brought a bill to parliament and they said, we are going to take all these things back. They actually got the bill approved because they had the majority, and they actually started taking these factories and things back. What they didn't realize at that time is that they are damaging the Sri Lankan economy for at least 20 to 30 years by that one decision. How can a legislature be used for such an action, whether it's a Sri Lankan investor or whether it's a foreign investor? Investors come based on confidence. You do a thing like that, confidence is completely lost. And we still haven't recovered from that. The doing business index in the country today is below, it's 99 or something. But the enforcement of contracts is 164 on the enforcement of contract. Who is the businessman who is going to come here? Who is going to come here? You look at the trading figures, right? 25, 30 years ago, approximately, Bangladesh, Sri Lanka, Vietnam were all about $4 billion somewhere there. Today, right, Bangladesh is at about 80 or 90 billion dollars. Right? Sri Lanka has gone from 4 to 12 or some number like that. Right? Bangladesh went from that 4 to 90 or whatever. Vietnam has gone to 300 plus. Surely we have to be doing something wrong, right, to be in that situation.
Right. And the last question on the period of Yahapalanaya, Mr. Wickramaratne, there's a common critique about the ISBs. So just for our audience, I'll quickly mention the critique of the ISBs is that these are usually not suitable for development. They do not necessarily produce a corresponding asset. They're less transparent. Sometimes ISBs end up becoming working capital, which is, as you will know, a huge problem. There are collective action clauses, which means that when you have to restructure, there is another issue. And they're also tradable and dependent on the ratings agencies, which makes future borrowings more expensive. So that's a rollover risk. Now, we mentioned Dr. Kumaraswamy. He has taken. I want to also comment like you did, because he's very open in his press conferences, and he was on a webinar recently where he gave a very good defense of the ISB investments during Yahapalanaya. But a recent study in 2009, there was a study that showed that. From 2009, ISBs accounted for about 5% at that time. 2014, it was 20% of total external debt. By the end of Yahapalanaya, Mr. Wickramaratne, it was around 40% of total external debt. And as we mentioned, you also State Minister of Finance. I assume the State Minister of Finance doesn't have much sway over these decisions, but is there something that you would reconsider from that period regarding the ISB?
Yeah, so clearly one of the issues is you can't do development by basically taking finance at high rates. ISBs is the instrument, but taking it at very high rates. And particularly if you are having very, very long-term returns, as like running the company, you need capital and you need debt. So you have to figure out what the balance is going to be. So that is the issue. And I think can say one thing clearly, we did not take money, borrow money, and we didn't put it on physical infrastructure on that scale, because we learned the lessons from the earlier scale. But I would point out that, right, really in calculating, yes, the debt went up, that's for sure, because you can see from the numbers that it has gone up by about 40%, it has gone up during a period of time. But if you really look at what the debt was used for, you will see that most of that debt went into servicing debt that was already there. And Verity Research Company had done actually a calculation, right? And it based on lots of assumptions, because naturally if information is not available on all the details. Yeah. So some of the things they said was interest cost estimation was actually difficult to do based on it. Then arbitrary accounting, central government debt is sometimes arbitrarily moved back and forward. It's sometimes put in the company, sometimes it is pushed back. So some of those were actually in the company, right? And this research paper actually shows it. If I give you two examples, US dollars 828 million in central government debt was taken from the Exim Bank of China for the Putlam coal power station, right? And they kept it in the books of the company, and then they moved it into the books of the government, into the central bank. So when you compare the two periods, that is one of the things that really shows that you're not comparing really apples with apples.
Were they complying with the accounting standards at the time, do you know? Or is it
I think government can arbitrarily move. Like in SOE, for example, right? You can say it's given to the SOE, you can say it's SOE debt. But really it's our debt because we know that SOE can never pay for it. So then we move it in. So that was one. The other one was another US dollars 951 million was taken from the Exim Bank of China for the Hambantota Port Development Project, right? It was taken. The earlier one was coal power plant. This was the Port Development Project. And it was on the books of the Sri Lanka Ports Authority in 2014, just before government changed, right? And later on, the National Audit Office made a note, and we transferred it from the books of the SOE, where the National Audit Office said this is the proper way to actually account for this. We brought it into government. So when you do the analysis, as I said, arbitrary accounting is there, SOE debt, sometimes guaranteed debt coming in here, and then you had the issue about, as I said, about interest cost estimation. Right. When you put all that together, right, it says that 90%, 89.8%. If the ISB interest returns were roughly about 3.9%, well, 89.8% was actually debt that we took was to repay debt.
Refinance.
Yeah, if that went to 4.1%, it's more than 92%. So that is why I said that thing that we just took debt in an irresponsible manner is not actually true. And when we took debt at the end, we knew 2 elections were coming, but that debt was not used. It went into reserves.
Yes.
So Sri Lanka's reserves were like $6-7 billion dollars at the end of that period. So I could say this. I could say that we managed the economy quite effectively and efficiently. Could we have done better? Always you can do better, because where we couldn't really focus is we were creating the macro platform. Then you have to build the confidence. That part we were just getting into it, and then you invite investors to come. If you look at remittances, they were at the height during the period. If you look at even tourism incomes, 2.1 million tourists.
The peak, yeah.
It was a peak, came into the country. Investments, I'm not happy. There's investments, we have a lot more work to be done. So the positives, and this was the negative.
Right.